good morning, managements, analysts, bankers, investors, and distinguished guests. So on behalf of Thai Union Group, I would like to give you a warm welcome to our last analyst meeting of 2022 for quarter 3 result announcement. My name is Pimtip Phakthongpan and I'm your MC today. So I hope you guys like the new event as much as we do. And if you don't have a presentation in your hand, and if you would like one, please raise your hand and our team will hand you the presentation. So today we have the two products showcased for you. One of them is tuna slice in Q Fresh Light. This is our award-winning innovation products. We have two flavors for you. It's smoke and paprika. So I believe some of you might have tried it before, and the taste that what we have for you today was tuna slice in cheese and croissant, and then tuna slice in melon skewers, and then tuna slice with cheese lava spring rolls. So this product is actually very healthy. It has high vitamin B12 and selenium. There's also no MSG and no food preservative added. And most importantly, it has 0% fat. So those of you who actually care about fat contents in your food, this may be one of your options in the future. For those who haven't tried, we will also still have for you during the break before TFM announcement. This product will be launched in next quarter, so in quarter 1 for 2023, so please stay tuned. The second product showcase we have for you today, it's our pet care product from ITIL Corporation. For a pet lover, we have brought to you our own branded pet food and treats. Bellota for cats and Marvel for dogs, and Changster for both cats and our doggo friends. So ITIL is actually the second largest pet food producer in Asia. We focus on human-graded, good quality pet food and treats and produce with our innovative technology, aiming to better our four-legged best friend quality of life. So our pet food is actually human-grade. You can try if you wish, but be warned that it's made for pets, so the taste is optimized for their taste. Moving on to quarter 3 result announcement, our key speakers are Mr. Ludovic Garnier, our Group CFO. He will walk you through the key financial result and FY22 guidance. Ms. Ratinan Wongwacharanon, our Head of Investor Relations, she will present to you the business performance, and Ms. Neroli Goman, our Investor Relations team, she will present to you the key development and strategy update. So as usual, this section will take approximately 15 minutes and it will follow a Q&A. For 30 minutes, we will then have 15 minutes break and follow with TFM result announcement. So without further ado, please allow me to invite Mr. Ludovic to begin the presentation.
Thanks a lot, Pam. Good morning, everyone. Very happy to see all of you this morning. First of all, I want to apologize. Comte Rapong is not able to join today. He's on a business trip. He wanted to see you because we have very good numbers. He wanted to share the good information with you. So we will try to replace him. Okay. I hope you did enjoy the tuna ham. I think this is a product we have been working on since few years already. And I'm sure you are also delighted with some few samples coming from our pet food business. I must admit, I'm very impressed with what we are doing. Sometimes we're a bit confused. Is it for human or is it for pets? But the pet seems to love that, so that's good. Okay. So I want to walk you through the financial performance. In Q3, I'm sure you had a view already on the numbers yesterday. It's a very strong performance for us in Q3. We have a record high sales, record high gross profit in absolute amount, and a record high net income. I think that's it. There is no more to say on this. So for the first time in terms of sales, we are exceeding 40 billion, so 40.8 billion baht, growing by 15%. Of course, we have a portion of this one which is explained by FX. But we have also a very strong impact coming from the volume growth, and we will elaborate on this one after, and also the pricing also are the key drivers on this one. In terms of category, we have two very strong growths. The pet care and value added is really growing a lot versus last year. The same for the ambient. The demand in the ambient business, and especially for the OEM product in the ambient, is very strong. Okay, so the growth for the ambient, and the team will elaborate on this one, is around 14%. The frozen business, we are still facing some challenges. You will hear TFM after this discussion, and overall we still see some kind of normalization in the US. However, the frozen in Asia is doing well, and our chilled salmon business in Europe is also recovering. So this is for the sales. Now moving to the GP. The GP amount to 7.4 billion baht, quite very strong in terms of GP margin at 18.2%. Once again, the two key drivers are the pet care and value-added category, and also the ambient one. The frozen is dropping also a bit. We're not happy about this one. We can see again this normalization that we already mentioned in Q2 regarding the US. We are not yet out of this period, so it still continues in Q3. In terms of OP, it's not all-time high because the SG&A are still a bit high. We are still facing some inflation on the logistic cost for the whole quarter, something around 300 million baht in terms of price impact in Q3. The good news for us and also for you, I think in September, we see really the price of the container reducing, and also the lead time between Thailand and the US also reducing. Okay, we need to see over the next weeks if it is confirmed, but the direction is clearly downwards. I think it's a very good news. You know, we have been facing with this inflation of logistic costs since few quarters already, so very good news for us and the business to see this decreasing. But total OP at 2.3 billion baht, growing by 24%. I think this is an excellent performance. And the good news is, on top of the very strong operating performance, below OP we also have some good news. The good news are mostly coming from the FX gain. You can see in Q3 very strong FX gain, and we will elaborate on this one a bit further after. And also tax credit, which are also growing compared to last year. Of course, they are partially offset by Red Lobster. The share of loss is growing versus last year. We're not happy about this one, and I will elaborate why after. And we are not benefiting also from the other income from Red Lobster. But in a nutshell, 2.5 billion baht, this is all-time high for us. First time we are exceeding 2.5, so we are extremely happy about this performance. So now if I move to the 9 months performance, and again, you can see revenue, gross profit really growing versus last year. The OP is still declining, almost 10% versus last year. The EBITDA also declining by 11.5%. Net profit now is very close to last year. And this is something which is very interesting, I think. If you do remember, last year was for us all-time high. That was the first time we did exceed 8 billion baht net income over 12 months. Here, after 9 months, we had 5.9. 5.9, we are just below last year. Last year, after 9 months, we were at 6.1 billion baht, okay? Keep in mind also that in our 5.9, we have the restructuring, the Rügen Fish restructuring effect that we did announce in Q2. So if you exclude this one, we are on track with last year, which was our best year ever, okay? This is very encouraging, I think, given all the challenges we are facing around inflation, around tensions in the world. This is really an excellent performance. Very happy about this one. The long-term view, so this is the view over the last 5 years. Very happy about this one. I think the sales story has been extremely strong. You can see double-digit growth is something we're not really used at Thai Union. You know, usually we were saying a few years before COVID that the market was mature. So we were not used to deliver this kind of double-digit growth. We have been delivering very strong growth over the past few years, okay? Keep in mind that our focus is not on the top line, okay? Our focus is the bottom line. We want to improve the bottom line. Yesterday during the analyst call, there were some questions regarding the sales for next year, the sales guidance. It's too early at this stage. We are not concerned at all. We are not at all concerned by this. There will be few impacts, and we can elaborate a bit further in the Q&A. Very unlikely we will deliver another year of double-digit growth next year. Very unlikely, okay? So we will target a single-digit growth for sure next year. Inflation will still continue. If you look at the fish price, and we have one specific slide on this one, the tuna price in 21-22 went up compared to 21. 21, we are very lucky with the fish price. 22, we see some inflation. We do expect to see more inflation in the tuna business next year. The salmon price was record high in 22. We do expect to have some kind of normalization, yet still very high also next year. And the shrimp price was a bit ups and down. But despite all these changes, you can see, I think our gross profit margin performance since the beginning of the year has been extremely interesting. And you remember 2 years ago, we said anything above 17%, we were happy, okay? And you can see that now we have been exceeding the 17% now since 2020. So of course, now our expectation is growing, and you know that our ambition by 2020 is to be in the range of 20%, okay? The net profit also, I think, is very interesting in terms of net profit margin, and we've been really growing this year. We are still facing some challenges. Inflation is still there. Okay, we see some positive sign on some topics. You can see here, look at the graph on the top left. So this is the freight cost. Okay, if you remember, the freight cost for our ambient business before COVID was something around $2,000. $2,000 from Thailand to the US, which is for us our key exposure. And then it went up to 12 or even 15 hundred dollars $1,000, sorry, during the year 2022. Huge inflation. We talked to you already about this one. And you can see here we show the number for September. September we are 6,000. Okay, so this is a very positive news. The prices are normalizing. Okay, we are not yet back to where we were before COVID. I think it will still take a bit of time. Yet I think this is very encouraging. And you can see also the lead time went up really. Initially before COVID we were around 35. We went up to 60 days. And now in Q3 we're at 47. So the trend is really good. You know, this is one of the key drivers for the increase of our inventories. And when I will discuss about our net debt, you will see our inventories are record high at the end of Q3. This is clearly one of the key drivers. As soon as you see this kind of normalization happening, you will see our inventories declining. Apart from this one, you can see we put some few examples on utilities, on the steel, on some ingredients. You have the sunflower oil, you have the gasoline, you have the coal. Overall, we have some positive news. I think the situation is different depending on the regions, meaning we can see still a lot of inflation happening in Europe. In 22, it was already very high, very likely because of the war between Russia and Ukraine. It will continue next year. So this is something we need to be very careful about. The inflation will also happen in the US and in Asia. However, we do expect to be at a much lower level compared to Europe. On the right, you have our solutions, of course, to mitigate with the inflationary pressures. Of course, the pricing negotiation has been a deep activity for us in 22, and it will remain again in 23. And I can tell you, in 22, the discussion were okay because the retailers and our consumers and our customers, they could see inflation happening everywhere. We do expect in 23, we don't expect them to be so open for price increase. Why? Because the inflation has been so strong in 22 that it has some impact on the volumes in their business. Okay, so we do expect the discussion on the pricing to be much more difficult in 2023. Apart from this one, we continue our hedging strategy. Sometimes on the raw materials, you know that we can hedge the salmon price, for instance. We cannot hedge the tuna, neither the shrimps. We are continuing also our strategy on the hedging on the FX. You've seen that the year 22, in terms of FX, we have seen a lot of volatility on the USD and also on the euro and the GBP. We have been pushing a lot of our inventories. That was one way for us at the beginning of the year to say we know inflation was coming. So we decided on purpose to increase our level of inventories because, of course, when you have some inventories, you are kind of protected versus the inflation. However, right now, I think the level of inventories is extremely high for us. Some of this, of course, is explained by your volume increase. There is some pricing, of course, effect on this one, but we do expect the inventories to drop in Q4. Apart from this one, really trying to optimize our operations is key for us. Okay, we shared with you in Q2 some examples of automation we have been doing in all our factories. We will share with you a video on our pet food business, and we are also pushing on automation and how to gain more in terms of efficiency. Okay, why? Because the labor costs are increasing everywhere. We will talk at the end of the presentation regarding the minimum wage increase, which happened in Thailand at the beginning of October. So, and the situation will remain. We want to remain very agile. I think the feedback from the top management is to say here, there is a lot of uncertainties right now going to the world, okay? Political, you heard all the tensions right now happening between South and North Korea. You heard the tensions between China and the US. You heard also the tensions in Iran. So many things can happen. Of course, the war between Russia and Ukraine, we don't have any clue what will be the end yet of this story. So here the feedback of the top management is to say very happy about the performance in 22, but we have to remain very agile and really cautious about what we are doing because there will be more uncertainty also in the next year, okay? This is our life now since COVID-19. We are not scared about this one, okay? We know that there will be some good and bad surprises happening in the future. That's fine. I think the past 2-3 years, we have demonstrated that we were able to manage this one. So our usual focus on the fish price, you can see the tuna prices was around 1,700 in Q3, growing a bit versus Q2. That was expected. You know, Q3, This is the quarter where we have some fat ban on this one. We told you we were expecting a bit of inflation. It's still in what we call our comfort zone, between 14 to 1700, so no big deal on this one. The salmon price, we told you in Q2, was all-time high, 97 NOK. This is something which is completely unusual. It was all-time high. It is kind of normalizing in Q3. Let's see in Q4 where do we go, but of course it's easier for our salmon business to manage this kind of price. And the shrimp price was very high in Q1, now in Q2 and in Q3. Also, it has been kind of normalizing. The FX, the next one, of course, you know the USD is very high. In Q3, it was an average of 36.4, but growing a lot versus Q2, growing a lot also versus last year. And you can see the trajectory has been always growing since the beginning of the year. Okay, this is good for our business. Of course, we are mostly an export business, so we have an exposure which is mostly on our conversion cost. Our conversion costs in Thailand are denominated in Thai baht, so we are exposed on this one. So as soon as the Thai baht is depreciating versus USD, the competitiveness of our factories is improving. And clearly, this is one of the key drivers for our strong volume and our strong sales and our strong profitability in 2022. Different situation with the GBP, and in Europe, they have been declining versus Thai baht in Q3 and also versus USD. We have the next slide, and yesterday we had a lot of comments and questions on this one. So apparently it's not so clear, and sorry for that because we wanted to clarify a bit the effects. I will be quick on this one. We have in the appendix, we will show you another slide. We will remind you what we did communicate 3-4 years ago when we did move to IFRS 9, and I hope it will be clearer with an example with numbers. But what I want you to keep in mind is when you look at our Q3 numbers and 9 months number, we have one line where we have all our FX gain, okay? And you can see in the middle, maybe if you can show it here, we have 800 million baht, 792 for 3 months and 1.3 positive billion baht, okay? And sometimes I have the feeling that your perception is this is an impact in our bottom line. This is not correct, okay? Why? Because we have some other impacts from the FX, which are including in our sales, and usually we don't detail them a lot, okay? And this year, this quarter, they are very negative, okay? And you can see here, can you show them again? 900 for Q3 and then minus 1.2 for 9 months. Why? So the net impact in our bottom line purely from the accounting effects, if I may call this one, is kind of limited in our numbers, okay? So the 2.5 billion baht we have in terms of net income for Q3, it's a real 2.5, okay? We don't have 0.7 or 0.8 coming from the FX. And I think it was very important for you to have it in mind. Why do we have this situation? We always explain to you that our hedging strategy, we do some hedging all along the year. Okay, so when we have some orders, as soon as we have some orders, we do hedge, okay? In general, for the vast majority of our business, we have a maturity of our hedging which is between 4 to 6 months, okay? For a smaller portion of our business, we will have a maturity which is much longer, okay? Meaning all the forward that we are executing right now, we took them 5 or 6 months ago, okay? At that time, of course, the FX, the USD to Thai baht, was much more unfavorable compared to now, okay? So now when we do settle this forward, it triggers some negative impact for us, okay? It's not a big deal because we had a very positive impact at the bottom, okay? So remember, the goal for us in our hedging strategy is really to secure the spot rate. We want to beat the spot rate by a bit, but we don't want to generate huge gain or huge loss, okay? I will provide you after in the Q&A session, if you have more questions, more details about this one, but I hope it clarifies a bit. Red Lobster. So Red Lobster remains one of our key operating challenge in Q3. You can see the performance, the contribution to our net income is minus 500 in Q3. The share of loss is higher compared to expectation as minus 339. Apart from that, all the rest remain kind of stable. The lease, the interest expense, the income tax is a bit low this quarter. I do agree there was a specific comment yesterday. The tax in the US, and especially for Red Lobster, is something very complex. Okay, it's a combination. If you have more questions, we can address in the Q&A, but it's very difficult to predict and to have something which is kind of stabilized. Okay, I can elaborate further in the Q&A if you want. The key challenges we are facing. We told you in Q2, we will increase the prices, and we did increase the prices by 9%, okay, in August, but we don't have the full quarter impact. So we are still penalized in terms of profitability at the restaurant level, okay? So our margin at the restaurant and the cost of the food over the whole quarter is not yet where we want to be. Okay, we told you in Q2, we're going to increase our prices, so the cost of goods compared to the net sales will drop, and this is what we see already in Q3. However, we are not yet where we want to be. Okay, so this is one of the key drivers of the deterioration versus last year, because the inflation has been keep growing also in Q3. Very likely also we'll have to execute another price increase in November. So this is the first challenge we are facing. In terms of also of labor optimization, I think we have to do better at Red Lobster. You know, there have been some ups and downs in the guest count over the past few months, and we need to make sure that we have the right number of workers and staff in the restaurant. So this is another topic we are facing. We have been spending more also in marketing. You know, the last 2 years, 20 and 21, we have been reducing our marketing activities. Now we do increase again. And finally, we had a small impact because last year in Q3, we had some support from the US government, which is not happening again in 22. Apart from that, no interest in the preferred shares. Same situation that we had in Q2. We told you that. If you saw yesterday, the Fed announced another increase by 75 points. That was expected. Okay, and in Q4, we do expect it to be the same situation. We will not record any positive or negative amount in this line other income. Okay, you may have some question about 23. It's a bit too early to communicate at this stage, but very clearly, if you read the Fed minutes from yesterday, the trend will continue next year. So the interest rate will increase further. Okay, and we can comment a bit further if you want in the Q&A. Our guidance for 22 for the full year, we have been deteriorating our guidance. Of course, we need to acknowledge that the performance in Q3 was not exactly aligned with our expectation. So now the full year guidance is 1.1 billion baht. Okay, again, we're not happy with this one. I think we can understand with the Omicron in Q1, with the inflation coming in and all the challenges, we can understand this one, but we don't accept that. And I can tell you, the management of Thai Union is really committed to improve the performance at Red Lobster. Okay, you know, Tirapong has been visiting 50 restaurants a few months ago. I've been in the US also twice already this year, so we are much deeper involved in the management of Red Lobster. It will take time. Okay, we know it will take 2-3 years to turn around the business, but now I think our understanding of the business is much deeper compared to what we had before. And you know, before it was really managed by our other partners, but now since the beginning of the year, we really stand up in the management. The last bullet point is important. I think we did communicate on this in August. Thai Union did provide a financial guarantee to Red Lobster amounting to $65 million. Of course, you can understand, given the recent performance of Red Lobster, there are some discussions happening between the lender, Fortress. It's a consortium, but the key one is Fortress, and they wanted to have more security on their land. The next one is we just focus on the strategy. And the strategy does not change. We have many initiatives in order to increase the guest count and the sales traffic. So we do insist a lot on the value deals. Of course, you can see in the US, the inflation is around 9 to 10%. Okay, so all the consumers, they are looking for value proposition. Okay, so we are taking away from the menu some very expensive item, and we try something which is attractive also for the customers. We're doing some promotion. Right now, you have the endless shrimp happening in the US. It's one of the biggest promotion of Red Lobster, and I've been eating this one. These are very nice products that we can have in the US. The second one is we have some actions on how to decrease the impact on pricing and how to optimize the menu. Okay, same story. It's a dynamic change on this one, and I think we are going in the right direction. I think the third bullet point is the most important. We have been doing a bit of restructuring within the organization at Red Lobster. We have been removing some layers, especially in the operation. Okay, so we want the operations to be leaner. There were many layers between the top head of the operation and the managers in the restaurants. We did remove some layers. It's also part of the explanation of the costs that we have this year, but we do believe that with a much shorter link between the top of the operation and the restaurant, it will improve the operation. And lastly also, we did a lot of staff training in Q3. We told you that the execution in the restaurant is a bit inconsistent from time to time, so we did a very strong push on the training, and it's also one of the explanation of the additional expenses, because for us, it's a financial investment. We send many people, many managers from the restaurants, many staff to the training to remind them, okay, this is the way we do expect at Red Lobster the meals to be served. This is the way we expect the cleanliness of the restaurant to be. So a lot of things are happening here. On the last one, we talked already about this one, so I don't mention this one. The next slide is more an anecdote, but I think many of you have been trying this one. We have been opening the first Thai Union restaurant, first Red Lobster restaurants in Thailand. This one is operated by Thai Bev, okay, not by Thai Union. You know, Thai Bev is one of our historical partners, and they are really the specialists of the restaurant in Thailand. What will be the benefit for Thai Union? We are provided all the seafood in the restaurant. Okay, it's only one restaurant, so it's not huge volume, of course, but the idea is to grow. And I was very positively surprised with all the excitement we could see there. Okay, of course, we are a bit careful. We know how is Bangkok. You have a lot of new restaurants opening every day and then closing a few months after. We hope it will not be the case. Here we are testing the concept. If it is successful, there will be some more opening. It will not be 10, 20 like in Japan, but we are targeting 2, 3, 4, 5, depending on the success on the concept. But I really encourage you to go there. I think I was very happy with the dinner we had all together a few months ago. Net debt situation, I mentioned to you the inventories are all-time high. So our net debt has been increasing also in Q3. Keep in mind also that in Q3 we did pay also the second portion of our dividend. Okay, this will not happen in Q4. So now at the end of Q3, our net debt amount to 72 billion baht, okay, increasing versus the 61 from last year. The EBITDA is quite strong, okay, we have a 10 billion baht EBITDA, but you can see the impact of the net working capital is almost offsetting completely this very strong EBITDA. The capex are under control. We told you at the beginning it will be 6. For the whole year, we did revise down to 5. I will share with you that in my guidance. And apart from this one, the net interest are growing a bit. The tax payment are kind of consistent with last year, and the dividend is here. And we have also a small impact coming from the FX. You can see this is on the 1.9 box on the right, and we have also some additional lease liabilities. Okay, we don't have any concern. Overall, our net debt to equity is at 113. It's a bit higher compared to our target. You know, our target is to be between 1 to 113. You can see also that the cost of debt, the average one, has been growing a bit. Okay, this is 287 for the year 22. For the year 21, it was 262. So we are a bit exposed on this one, yet I think it's kind of reasonable, and we do believe we can manage. Moving to the next one, so we give some information. We're getting the breakdown by currency, by maturity, and interest rates. You can see by currency, the yen proportion has been increasing. Why? Because we did some refinancing already at the beginning of the year. So the proportion in yen has been increasing a bit. The short-term maturity also increasing a bit. Why? This is to finance our net working capital. Okay, and we do expect these to drop in Q4. And we added also an apple pie on the right with the interest rate. And you can see 60% of our interest rate are fixed, 40% are variable. So yes, we are a bit exposed to the increase of the interest rate. However, it is kind of limited. And finally, moving to the ratio information, you can see, I think, the two topics I want to highlight on this one is, first of all, the level of inventories. And you can see the inventories amount to 56 billion baht at the end of Q3. It was 45 1 year ago. So we did invest 11 billion baht in 12 months. Again, it was a strategy to push our inventories. We had also to face with the higher lead time. The direction is clearly to reduce. And in Q4, I think we will start to see really some reduction on this one. But this is why you see the inventory days growing at 144. This is a key driver for the increase of our net debt in Q3. The ratio, one word on the ratio on the right, net debt to EBITDA, we're at 526. This is a bit higher compared to our target. This is purely linked. This is purely temporary and linked to our net debt. As soon as our net debt will be decreasing, and in Q4, it will be decreasing, this ratio will improve. And net debt to equity, I mentioned this one, 113. It's a bit higher, but not far away from our target. We do believe our balance sheet is very strong. Okay, we don't have any issue regarding liquidity, regarding debt. We do believe we are very happy about this one. And now I will hand over to Kunjiji for the business performance.
Thank you very much. I'd like to start with the diversification from our portfolio. We have been trying to diversify our portfolio through the 3 businesses. In the first 9 months of this year, our businesses have continued to grow strongly, especially in terms of pet food. Our ambient seafood is 22%, is the majority, and frozen and chilled seafood has softened compared to the 2 other businesses, and the contribution has reduced to 37%, and pet care and value added is at 21%, up from 17% the year before. And a correction, ambient seafood was 42%. Overall, for these three businesses, we have achieved a new high for each business, starting with ambient seafood that has grown significantly compared to 2020. Last year it was 2.8%. We saw a growth, significant growth, and the margin is above 21%. And our frozen and chilled seafood, compared to 2020, we've seen great growth, 19%. Last year it was a high base. Even though it was a high base, we can still grow at about 2% compared to the year before. And the last business is our pet care and value added. You can see that the growth is very good compared to 2020, and since then, and 2021, we have had double-digit growth each year, and 42% compared to the last year. Overall, we have a new high at 115 billion baht. And this is significant growth compared to the past years. Our gross profit margin is still very strong at 17.5%. And in the third quarter, we have very good gross profit, as Ludo mentioned, compared to the year before. And we also have a one-time item from Reuben Fish. If we look at the ambient seafood, it has grown, but the volume has dropped a bit compared to the last year because our salmon and mackerel and the tuna ambient has been growing significantly and has low-digit growth. Our gross profit margin has improved from the year before significantly and is at 2.9% compared to the years before, and this is very, very strong. At the moment, ambient seafood in Asia and in the US is growing, even though we have the recession concerns and inflation, because the ambient seafood is canned seafood that is affordable, and the protein is easily accessible and easy to store. Looking at the results for the 9 months of 2022, this is in line with what we want. We have double-digit growth at 13%. We want to deliver. We are growing in each key market, and the positive factors are the higher selling prices that were increased throughout the year, and the increased demand in our key markets as well, and also the benefits from the FX, looking at the exchange rate between the Thai baht and the US dollar. We have 21.4% in the gross profit margin, and I'd like to have you take a look at what we're moving towards is to have our portfolio to have higher margin products to match the trends, consumer trends, and to provide a better margin than our overall portfolio. We have introduced new flavors and have line extensions to cater to the health and wealth customers. And lastly, we are looking at, we have single portions, for instance, because families today are becoming smaller and they want products that are more convenient and in smaller portions. In addition to this, we are focused on core efficiency in terms of our product, cost efficiency. We have solar panels in Seychelles, and we'll talk about this later today. And we also have our new cold storage project in Ghana. And this is going to help us in terms of inventory management efficiency. As for our frozen and chilled seafood, for quarter 3 this year, it has improved by 6.6% compared to the last quarter, which was low. The first half of ours, we were impacted by recession and inflation, especially in the US. And this impacted our frozen business, softening it compared to the ambient business and pet care business. But if we take a look at our sales, the volume drop did not come from our frozen products, but more from our feed business, where we had a shake-up of our portfolio towards higher profit margin products. And in quarter 3, compared to last year, we are in a high base. Last year, we enjoyed seafood prices in terms of crab meat and lobster that were in an uptrend, but this year, it's in a downtrend. In terms of 9 months, we're looking at the same trend. The growth has been influenced by the FX, especially in Asia and in Europe. The frozen business is continuing to grow in Asia and Europe for the 9 months, but what has offset that or softened it is the U.S. market. On the right-hand side, you'll see what we're looking at, what we're focusing on is our new development, new products, our innovations. We're not focusing on OEM products. We are looking at higher margin products. And secondly, we focus on ready-to-eat and ready-to-cook products. We want to increase the portion of these. And lastly, we want to drive our products through brand awareness. We want to promote our Q-Fresh or Thamachat products. And they are launching new products all the time. Thamachat just recently has a new market segment. They have entered cosmetics, and if the feedback is good, but at the moment this cosmetic product is still free, but if the feedback is good, they may continue to develop in this area. And we hope that you had the chance to try the products outside. We've also had taste testing for our tuna ham. This has not been launched yet in the market, but we're going to launch it in the first quarter of next year. And this is an innovation, a new product that has 0% fat and will be under the Q-Fresh brand and will be for those who are health conscious. Our last business, pet care and value added, is growing very well, 66% compared to last year, compared to the other businesses. And it's because of the increasing sales price, higher sales volume that has grown by 34%, and new products as well. And this is matching the consumer trend. Last year was low base for pet care products. We had to close our factory for 2 weeks in July to ramp up the production, and this ended by September. It's back to normal as of September. We're looking at pet care and value added. Normally, it's only at 26 to 7%, but we're looking at gross profit margin of 28.7% for our pet care business. The 9 months for 2022 is growing at 41.8%, and the gross profit is 27.6%. Our pet care business, we're looking at expanding our capacity and our production efficiency. We'll talk more about this later. And we're going to also launch warehouse automation. We're aiming towards 100%. And we have over 200 cats to do product testing so that we can provide the best value to our customers. And in terms of packaging, we're looking at more automation as well. And I'd like to show our technology in terms of automation for pet care. The products in our pet care business, even though most of them are OEM, we do have our own brands which are displayed outside the hall today. Bellotta is not only sold in Thailand, it's also sold in Myanmar and Vietnam and India, and the feedback has been very good. Bravo and Chester are sold in Thailand first. Chester is a premium product for dogs and cats that have kidney issues, and we're trying to meet customer needs. And after we launch the products for the kidney conscious pets. We're looking at improving fur condition, for instance, and we want to offer food for dogs and cats and pets, for the food to be like medicine for them. So we don't want them to feel like they're having medicine as food, but make the medicine tastier for them. And we're going to show by region now. At the moment, the global economy is volatile. There is high inflation in many regions, and there is recession as well. But we'd like to share that our business in each region is very strong. Let's begin with the U.S. and Canada. It is still growing by 15% compared to last year, and we have a positive impact from the exchange rates, from the higher selling prices, and from FX. And if we take the FX out, we're still growing very well in the U.S. And in Europe, our sales have grown by 6% compared to last year, and we have higher selling prices and volume growth, even though the Thai baht compared to the euro or the pound, we've seen the appreciation there. If we remove our organic growth is double digit, almost 12%. And our sales in Europe are still strong as well, especially in France, Germany, and Italy. And in this year, this country that has softened in terms of sales is the UK. And for Thailand, it has grown very well by 31.4%, mostly from our value-added businesses, which are packaging. And we have been able to increase our customer base for TU and outside TU. And lastly, our emerging market and the rest of the world has also seen double-digit growth, 19% year-on-year. And the drivers are from Japan, that grew by 28%, the Middle East 45%, and Australia 43%. And I'd like to go quickly through the rest. You'll see that the best growth is from our tuna and salmon, and we've seen improvement compared to earlier in the year, and pet care and value added have all grown. And in the next session, I would like to ask Lena to take over. Thank you very much. Our company has invested to support and drive our core and new businesses. Today, we have four projects. The first is our culinary business, and this is our culinary project in Samut Sakhon province. This is a facility that produces ready-to-eat products, namely dim sum and bakery. And we have 3 factories that we've merged into one new one in Samut Sakhon. And we have also increased automation there. We have an automated warehouse, or ASRS, and we're going to increase our production capacity by 38%. And we expect that we'll be able to produce within the second quarter of next year, and we have invested capex of around 1.2 billion Thai baht. The second project is for our ingredients business, and this is for protein hydrolysate and collagen peptide. And we're going to use the head and skin of fish to make it into protein powder. And this is to expand into our Asian market. We are in the process and we are on track. We expect to be able to produce by the first quarter of next year. And our capex is at 1.1 billion Thai baht. The third project is our pet care business. This is a factory for wet pet food and pet treats for dogs and cats. And this is at Samut Sakhon as well. We are going to increase our production by 18.7%. And we have our automated packing line as well. We are on track to commercialize in 2023. And our capex, we expect to be 2.1 billion Thai baht. And lastly, in Ghana, we have our cold storage for raw materials of tuna to produce ambient products. And this will include a wastewater management facility, and we're investing 550 million baht, and we expect it to be finished by the first half of 2023. These are some examples of our innovation products in terms of pet care, and many of you probably saw from the display outside. As many of you already know, iTail, our pet care business, we are going to focus on premium products and innovative products that are able to provide a higher margin. We are using the concept of humanization to provide products to owners of pets, like our ice cream swirl. We've transformed that into what you can see on the screen right now. We have chips, for instance. People like chips, and we've used that idea to create dog chips that are made of 100% chicken. And the company has launched many innovations and continues to launch innovations. Our new business begins with our ingredients, and this business is a B2B one, and it was started to increase the utilization of tuna, parts of the tuna that were not used in our canned tuna. At the moment, we have tuna oil already, and we have a factory in Samut Sakhon for this, and also at Seychelles and Ghana, and in Germany. And right now, we're going to expand our protein hydrolysate and collagen peptide plant. You can see the picture on the left-hand side. This is the progress in terms of construction. And this will take the powder and use it for supplements and cosmetics, for instance. In the past quarter, we have invested in Mara Renewable. We talked about this in August. This is the second largest in the world in terms of algae oil, and this is to increase our omega-3 portfolio to cover tuna oil and algae oil too. We have launched a new product in terms of medical food, the medical food category. We have Fish Pro Low Sodium Snack. This is a seaweed flavor. It is a snack, and it has high protein, has high vitamin B and selenium, a high level of selenium as well, and is low sodium. This is an alternative product for kidney patients, and they can have this instead of egg white. Research backs this. We have research from Pramangkutklao Hospital and also from Thai Union. And this is a product launch through a joint venture with Interpharma in last October. And at the moment, we are selling this through hospital channels and pharmacies. And in our next business, this is our supplements. This is a B2C business that we launched in the third quarter of last year under the brand C-Vita. And we have gotten very good customer response. This is the number one brand for collagen in the super hyper chain and also in online channels. And we've seen tremendous growth, for instance, in Shopee. In the last quarter, we launched our line extension in terms of collagen, whether it's gluta or zinc or astaxanthin. And the fourth thing, the latest one, is our Prebo Fit. This will increase extract from white kidney bean, and this is for those who want to manage their weight, and this will be launched this month. And this business, we're going to focus on a target achievable of 1 billion Thai baht by 2025, and we expect to achieve sales of more than 200 million Thai baht in 2022. As for our alternative protein business, we are going to remain committed to drive our business. In the third quarter, we announced a partnership with a leading business in the U.S. known as ISH. This is to help our growth and our market presence in the U.S. The shrimp dumplings that we launched in the last quarter also received very good consumer feedback, especially in terms of texture and taste. Many of you who did not have the chance to try this last year, you can buy this under the OEM brand in the supermarkets. Select in Thailand has launched new products under the concept of healthy living as part of the 30th anniversary. And we focus on products for people who are health conscious and also seeking convenience. We have our new packaged tuna. We have the Doraemon design. And we also have delicious tasting products with high omega-3 and no MSG. And it's all for the health-conscious consumer. And on the right-hand side, you'll see we have our tuna plus collagen product. And this is for people who are very health-conscious. It's in spring water, and it includes collagen equal to 2,000 milligrams. This is the first time in Thailand for this product, and it is on sale in Tops. And we're going to launch it this month very soon. This is another commitment from us to strengthen our core business and to expand our portfolio in terms of healthy living and to focus on innovative products that can provide a higher margin. In terms of our CVC, we continue to focus on food tech. We have a corporate venture fund of 30 million US. From last year, we have 8 startups, and there has been significant progress, especially in terms of alternative protein, that has received investor interest, high investor interest. We invested in two businesses in insect protein. The first is Orga Feed, and this is the owner of leading brands in Thailand for snacks that are made from insect protein for dogs and cats, for pet dogs and pet cats. And this is made from insects, and this is to help the circular economy. They have a new factory in Bangkok that began production in last April and plans to expand next year. And at the moment, Thai Union has also started OEM production for Orga Feed. And this is 100% production of Orga Feed, and they are pet treats, and this is from Thai Union. On the right-hand side, you can see Flying Sparks. This is another company that we have invested in. This company is listed in Tel Aviv, in Israel. And we have a project to build a factory to breed insects, and this is ongoing in Phetchaburi province. We're going to explore how we can apply their products that are insect protein in our businesses, whether it's in terms of pet food or aqua feed or ingredients. And in terms of sustainability, we are committed to healthy living, healthy oceans, and we are still the leader in the industry in terms of sustainability. We are very happy to inform you that we have received evaluative scores from S&P Global, And this was an evaluation to be included in the Dow Jones Sustainability Index, or DJSI, and our score is 86, which increased from last year by 2 points. And we have the highest score in the food industry and in terms of sustainability and for society. And we also got 100 as a score. And S&P Global will announce the results in December. Aside from this, Mr. Thiraphong Chansiri, our CEO, our chairman, has been appointed as the chairman of CBOS, which is Seafood Business for Ocean Stewardship. And this is a joining of 10 of the world's largest businesses in seafood. And it is an opportunity for us to work together in terms of fishing and aquaculture and aquafeed to increase the sustainability of the industry. This is our solar panel project. This is another important project for sustainability. It's for renewable energy. We have installed solar panels in our factories in Thailand and in our foreign factories. This is the factory in Seychelles, which we just completed the project in September of this year. And we invested around 12 to 13 million Thai baht. And this accounts for 8% of our total energy consumption. This is not a very large project, but it is in the direction that we want to have greater focus on to reduce our utilities costs, as Ludo mentioned earlier, especially in Europe, and to increase our use of renewable energy and to support our commitment to reduce our greenhouse gas emission in the supply chain leading up until the year 2025. The company has received credit rating from TRIS at A+, and the trend is also positive. It's a positive outlook. It hasn't changed from last year. We have our Japan credit rating also, JCR. We expect that to be announced very soon. And this reflects our strength, our financial strength, as well as our ability to drive our value-added businesses and new businesses and our expansion plans in terms of production facilities and our ability to manage our costs despite the effects of inflation, logistics, FX volatility, or raw material prices, or even the increasing interest rates. And these are awards that we have received. We've received awards from global institutions, whether it's in terms of HR, human rights, in terms of CSR, and in terms of innovative products. You can see more details on these. Other details are available. And lastly, let's take a look at the minimum wage. In Thailand, the minimum wage has been increased by about 5% on average since the 1st of October, from up to 353 in Samut Sakhon, and we've seen an impact from this. And the increase in the minimum wage, we expect just a small effect, a limited impact, in fact, at only 0.2% of annual sales. And the company has put in place plans for automation in our production for the past 2 years already. especially in our frozen and pet care and value-added businesses. And we continue to strive to do this, to increase our production efficiency and to reduce our labor intensiveness and to be a factory of the future in our facilities. You can see the breakdown of the costs. The labor costs are about 5.7% of the cost of goods sold, and this is not very high, and this has decreased, in fact, compared to the 9 months from last year. This is one factor that may impact our costs, but it is not a main factor compared to other factors, such as our raw material prices and packaging. And I'd like to hand things over to Ludo now.
Few words on this.
Yeah, just a quick comment on this one, and we mentioned this one in Q2. This is not a surprise. We knew that there will be some minimum wage increase happening in Thailand, and now it's effective beginning of October. Honestly, we were expecting more. Okay, so with the expectation that we had, we are a bit higher compared to this average 5% that we have. Of course, it will impact us in our Q4. You can see we don't expect a huge impact coming from this one. We'll have to adapt our prices also moving forward, but it's not a surprise, and it will happen everywhere. And I'm sure you saw that everywhere in every country you have some discussion regarding why should be the inflation rate. And just to be very direct, also we believe this minimum wage increase is justified. Okay, we have to acknowledge also the prices went up. So of course we want our employees to have a decent life and to be able also to buy what they want. So we are very happy with this one, and again we're expecting this increase to be a bit higher. Just a quick word on the full year guidance. And here we changed only one compared to our Q2 communication. We only changed the CapEx guidance. It was 6 billion in Q1 and Q2. In Q2, I told you very likely we will revise down, and we do revise down to 5 billion CapEx. Few things on this one. First of all, each time we provide you with a guidance, the 6 billion, it's a gross amount, meaning if we do any sales, the amount of the sales will offset partially the amount of the CapEx. So we had a bit of sales happening in Q2, and also we are not able to execute exactly all the projects that we have. You've seen also with the pictures of the factories, we are doing huge progress, especially in the culinary factory, but we have a bit of delay. We are still facing some logistic issues from time to time, and this is why we do revise down a bit our CapEx. All the rest remain the same. Okay, so in terms of target for the sales, we are targeting 10 to 12%. Right now, after 9 months, we are at 13%. So we are planning a Q4 with single-digit growth in terms of top line. If you get back to last year, Q4 21 was a record high top line. We are growing by 15%. So the baseline is very strong. The baseline in Q3 was a bit lower in 2022. The GP margin, we maintained 17.5 to 18%. After 9 months, we are at 17.5%. I do expect for the full year we will be in the low range of this guidance. Keep in mind that usually Q4, this is a quarter where the mixed category is a bit unfavorable. What does it mean in Q4? We sell a lot of frozen products, which is a less profitable business for us, and usually our ambient business and our pet care business are declining a bit in Q4 because of the seasonality. One thing also to keep in mind is our sales in both the pet care and the ambient have been extremely strong in Q3. We don't know the level of inventories in the customers, okay? And usually we are a bit careful after such a very strong quarter. It can happen that the inventories be very high at the customer level, and we can expect maybe the sales to be a bit softer in Q4 compared to the rest of the year. But that's why we have this target in terms of sales and GP. SG&A to sales, I think right now we are between 12.6 to 12.7. The target for the year end is to be between 12 to 12.5. Clearly, we do expect a reduction in Q4. Okay, I mentioned to you the logistic costs are declining right now, so we do expect that will be the key impact and the key driver for such a reduction. And all the rest, there is no other change. Okay, so in a nutshell, very happy about the Q3 performance. I think we have been doing extremely well. We are facing some challenges. Red Lobster is not where we want to be, and our frozen business is also where we want to be. However, our ambient and our pet care and value business are extremely strong. And I think this is really what I want you to keep in mind. Despite the inflation, despite all the uncertainties on the environment, Thai Union is performing really well. Shall we move to the Q&A?
Okay.
Thank you.
Thank you, team, for the presentation. Now let me open the floor for any questions you may have. So please raise your hand, state your name and your company, and our team will give you the microphone.
Hello, สวัสดีครับ
Hello, I'm Chatri.
About the Red Lobster progress, can you share more details about whether you have found a new CEO and who the new CEO is and what the new management team is planning on doing in terms of turning around, improving the business, and maybe also if you can share like overall industry trend for casual dining restaurant chain business in the U.S. How the industry overall is doing and what the expected trend is going to be in the next year.
Sure. So you're right. Talking about the CEO first. So we told you in Q2 we have an interim CEO. Right now, this is Paul Kenny. You know Paul Kenny. It was a top executive at Minor. He's part of the shareholders of Seafood Alliance. So he's one of our partners of the minority interest in this one, and he was highly motivated. I don't know if you know the gentleman. He knows very well the restaurant industry. He was highly motivated. He was not happy like us about the Red Lobster situation. So he was the one proposing to us, okay, I want to go there. I want to be involved. So he lives in Thailand, to make it clear. And he said, okay, I'm ready to spend 50% of my time in the US. I want to turn around the business. Okay, so this is what we did decide, and this is now effective since a few months. Already, he's there. He's interim CEO. The idea is not for him to become a permanent CEO, meaning we give him a few months to turn around the picture. And then after, once we kind of stabilize the situation, we will be looking for a permanent CEO. This will be happening, I think, by the mid of 2023, just to give you some idea. There were also some few changes in the management team at Red Lobster. All the positions are filled. Now we can feel really a new dynamic within the team. We do believe the team is able to turn around the business at Red Lobster, so that we don't have any concern regarding the management of Red Lobster. And I think the collaboration between Red Lobster and Thai Union has been really improving, and the knowledge is really good. You have to keep in mind the US guys, when they talk to people outside of the US, they believe sometimes they don't know anything. Apart from the US, the guys don't know anything. So we need to learn how to work together. And I think the collaboration has been really improving. And then you had the question on the industry trend. Of course, the whole industry has been facing with some inflation. And the casual dining is facing with this one. So what you can see right now in our performance, you have the same, roughly for all the casual dining. What you can see is all the fast food chains are doing quite well. Okay, the McDonald's, Burger King, blah, blah, blah. Because all the customers, when they have to make some choice, they will try to go to the cheapest solution. And that's why we need to be very creative and very attractive also in terms of value proposition, okay? You know the prices went up a lot in the US. I mentioned to you inflation around 10%, and especially the price of the fuel has been extremely high over the past few months. And the people in the US are very sensitive to the price of the fuel. You know, fuel for them and their car is something which is very important in the American mindset. So sometimes when they have to do some trade-off, okay, I want to go out, I want to go to restaurants, where do I go? They will go to a cheap solution, okay? So we need to attract to them, and this is why we push our marketing campaign, okay? We want them to continue coming in. So Red Lobster, this performance is not unique in the US. The casual dining are facing with the same challenges. We do believe we can turn around the picture, okay? The effort we have been doing on the training, I think is something which is really key. The fact that the execution was not consistent from one restaurant to another restaurant was not a good sign, meaning you had some customers going to one Red Lobster and be very happy about the experience. The week after or 1 month after, they go to another Red Lobster restaurant, and then the experience for any reason is not good. So we want to really step up the standard, and we have been working a lot also on the menu, okay? I want to manage your expectation. It will take time. We know that, okay? Given the situation, given the inflation, the situation will be very different without all this inflationary context, okay? So the situation is difficult, but I think we are on track. We see some positive sign from the operation side. We don't see that yet in the numbers. And I told you I would expect in Q1 23 to start seeing some improvement in terms of financial performance. Okay?
Maybe I can ask a follow-up questions regarding the pet food, pet care business. With the inflation that you mentioned, do you think that there could be some impact on demand next year given the rising costs?
I think we have now the example of 2022. In 2022, we have been facing with a huge inflation, not only in pet care, but in every category. And honestly, when you look at the demand and when you look at our volumes, you don't see the decline. Yes, there is some impact. We have some impact in some countries, especially in Europe, where we have been the only one in the market to react very quickly and to increase our price very quickly. So in this specific market, we have been losing some volumes very clearly because the competition, the OEM and the other brand, they did not move that much. Okay, so here you can see some volume impact. We have a price elasticity, which is existing, no doubt on this one. However, the prices of our product has been growing in 22, but the prices of all the other product has been growing a lot. Okay, now we need to see for 23. You have a specific question of the pet care. The inflation was there, yes, in 22, but you can see the performance of the pet care and value added in Q3. This is extremely high. Okay, keep in mind that in the pet care, our positioning is to try to be on the premium product. Okay, we are the expert of the wet cat business. Most of the competition is happening on the dry dog business. We are not there, and we don't want to be on the mass market. We could be there. We don't want to be there. We want to move to the value-added product. And you have seen also with the showcase we did just before the meeting that our products are really great, really great. Okay, and there is only one way for us. We will increase our prices if we are facing inflation. We have to be innovative. We have to be innovative, and we have to be extremely strong also in the execution and in our operations.
Any questions?
Seems very clear, or very quiet. We had much more questions maybe yesterday.
Thank you, Rudo. Planjai from CNS. Although you cannot give us the target of next year, but could you please give us some idea about what is, because next year you think that the sales growth may be single digits. So what is the factor, the driver, the positive driver for the sales, and also do you think the gross margin next year will be improved from this year, and what is the assumption of baht trend?
Thanks a lot. In terms of sales, we will plan next year for further growth. This is good. After a year where we delivered 10 to 12, we want to grow further. We are confident overall. The sentiment is very positive in our operations. We are careful. We are careful on the demand side. Of course, if we are facing as much inflation in 23 compared to 22, there will be some destruction of the volumes and of the demand. We are very clear on this one. However, we can see with the performance we have been doing in 22, we are confident overall. It's a positive confident. So the key drivers on the sales next year will be the volume. We do expect there will be some further growth. Question mark on the inflation. If the inflation is growing a lot, then there could be some challenges on the demand. The FX, we have been benefiting from the FX. We don't expect to benefit from the same positive effect next year. We do expect the USD to remain quite high. Also in 23, we did not yet formalize our guidance for next year, but we don't expect the USD to get back to 33, 34. We do expect to remain at a high level, and in our Q4 communication, we will share with you. There is one item that I want to highlight to you, which is what I mentioned on the logistic cost. Okay? The logistic cost inflation we have been facing for the past 2 years was one of the key drivers for the increase of our top line. Okay? So we have some cost increase by 100. We increase our prices by 100. It's good for our sales, but it means also dilution for our gross profit margin. Now that the logistic costs are going down, at one stage, for sure, we'll have to give it back to our customers. Okay? It will be negative impact for our sales, but positive impact for our gross profit margin. Okay? So we are not concerned. We remain very agile. Okay? You know, I mentioned a bit earlier all the uncertainties we are facing around, especially the political situation. We are very careful about this one. Okay? The war between Ukraine and Russia could worsen. That would be a disaster, but it could worsen. And here you don't go. If you go in the scenario of a nuclear war, you never know what is going to happen. Okay, so we are extremely careful on this one. But overall, to answer your question, we are positive on our top line. Okay, but I think after a year where we deliver 13 to 14% growth, it's kind of normal to get back to a single-digit growth. Okay, usually over the past few years, we are always targeting 4, 5, 6% top line growth. I wouldn't be surprised if we are in this range next year. Okay, keep in mind also that we have some new factories which will be up and running. Next year, we have one picture. Maybe you can show this picture, please. They will not be effective from the beginning of the year. Okay, so they will be effective for most of them in Q2. You need to do some commissioning, and then you need to have some ramp-up production. There will be some impact coming from this one. Okay, and also our other businesses, we mentioned our supplement and our ingredient business, they will be growing next year. So they will support the top line. Keep in mind, the top line is not our priority. Okay, our priority is really the bottom line. Okay, we told you a few years ago, we were at 14% gross profit margin. We told you we want to recover. Now we are at 17, 18. We are happy about this one, but we are ambitious. We want to grow further. Okay, this is very clearly the direction. So we don't mind about losing some sales if they're not profitable. And this is something which is very important. Here in the mindset of the top management in Thai Union, these are manufacturers, packers, okay? And the people here, they feel very comfortable where the factories are full. Why? Because the absorption of the fixed cost is very important. Since few years already, it's not new. We are discussing with every leader, okay? And we are saying, okay, we want you to move away from loss-making business or from non-profitable business. And this is not easy in terms of mindset. We have the same discussion with our frozen business in the US, okay? Because the mindset is to say, okay, if I have a very strong top line, I feel comfortable, okay? Our point is different, and we say we don't want you to waste your time, your energy, your efforts on some business where we don't make any money, okay? And we are in this journey. We did a lot over the past 2-3 years. We did remove a lot of non-profitable business. We still have some part of our business we want to grow further, okay? We cut also some businesses where we don't see we can recover. Keep in mind the mindset of Thai Union management is to be entrepreneur, okay? We don't like closing some factories. So we always give a chance to the business. We told you in Q2, we are closing one factory in Germany. We don't like that. But we have been trying to turn around the situation for the past 2-3 years, and we have overcapacity in Germany. That's very clear. We tried different things, potential M&A, potential also things, blah, blah, blah. It did not fix the situation. The only situation is we close the factory. We are not happy, but we are very clear. We have a program on the loss-making businesses that we have. We have some of them. The situation has really been improving compared to a few years ago. We still have some on our target list, okay? And there will be some more action on this one. We want to move away from this one. There are some specific businesses like the supplement business. We are okay to lose some money at the OP level because we are investing behind. We're investing a lot in marketing activities because we want to, it's a new brand, Zivita. We want this brand to be well known and we want to push for the top line. This business, we have a very clear plan. The first years, we lose some money. It will be beneficial in a few years, okay? But these are the ones where we say, okay, we want to be very selective in this kind of business. Clear? Sorry, my answer was a bit long. Sorry for that.
And also, because of this slide, you revised down that capex from 6 billion to 5 billion. I cannot catch you. What is the reason of the declining? Is it because of the delay or the cost saving?
I think two things. First of all, when we provide the 6 billion at the beginning of the year, we don't assume any sale of our assets, okay? And sometimes we sell a piece of land, we sell something. So when we sell something, it will partially offset our capex. This is what I'm saying. The 6 billion you have at the beginning of the year, it's a gross amount because we assume no sale of assets at all. But now in the amount that you have, the 3 billion that we have after 9 months, we did some sales. Okay, I think we have something like 300 to 400. Okay, so if you add it back, in fact, we had 5.4, something like this. Okay, this is the first reason. And we have this every year. This is why every year our actual spending in capex is a bit lower because we never plan for any sale of any assets. The second reason is the one you mentioned. Also, some of these projects are very large, okay? And we have been facing with some delay for some of them. The culinary is one of those where we're expecting to close earlier. The second one also, the protein and collagen, is also another one where we were expecting to close earlier. We have to be a bit realistic. All the logistic issues we have been facing, we have to acknowledge it take a bit of time, okay? For the collagen, we are importing some dryer coming from Germany. It takes some time. It just simply takes some time. So yes, there is a bit of delay, meaning my expectation for next year, there will be some roll forward of these activities again on next year. Okay, and the same, the capex amount I would expect in 23 will be significant. Okay, there was no intention to reduce. We told you in 2020 and 21, we had a clear strategy to reduce our capex to preserve the cash. In 22 is not anymore the situation. We do believe the pandemic, the COVID situation is much better, and we want to invest, okay? But sometimes we are facing some operating topics and issues where just building some large factories take a bit of more time compared to our expectation.
And also the numbers about the capex of each plant. This is the whole amount, or
That's
is it the amount that you pay in 2022?
The whole amount.
The
whole amount, which can be spread over a few years. You're absolutely correct. So it's not the amount we spend specifically in 22. This is the whole investment of this specific project.
So some of them will be paid in 2023?
Yes, you are correct with the finalization. However, I would expect the majority to be paid in 22. At the end of the 22, they will be very well advanced. You can see the pictures. The cold storage will be finished at the beginning of next year, very beginning of next year, so we would have paid the vast majority of the amount, and the same for the others. There will be some remaining portion, you are correct, next year, but I don't expect the majority to be in 23.
So are there any project initiated in 2023 so that the capex, what is the idea of capex of next year compared to this year?
Wait a bit, we will provide the guidance in Q4. It will be increasing. It will be increasing overall.
Increasing from 5,000 this year?
From the 5 billion that you have right now, it will be increasing for sure. We have some other very large projects, very exciting projects. We have one in Seychelles. We will elaborate more in our Q4 communication. Our pet care, also, we have a lot of projects regarding our pet care business. You have here one portion of the business. We are discussing right now what they are planned for the next year. They are very ambitious. Okay, so very likely the proportion of our capex in pet care will be increasing in our Q4 communication. We will share a bit more in Q4. Right now, we are in the middle of these discussions.
And I would like to ask about Red Lobster. This year, the operation loss is about 1
billion,
1.1 billion. Maybe it's a little bit higher than that, right?
It's a guidance 1.1.
Okay.
I think if you compare to what we have in Q2 and Q3,
yes,
we do expect to have a share of loss around 250 in Q4. If you just do the math, if you do the full 250, if you do the full year, 1.1 minus 9 months, you have the Q4, okay? And so we do expect to have
something, right? It's about
240. 237,
so
if you want to be exact.
So that one will be slightly happen, right?
Yeah, we do expect the situation to improve a bit. However, you know Q4 is not the best season for them. Q4 is happening just before Q1. Q1, for them in terms of seasonality, this is really where they have a lot of promotions happening. When you have, this is also Lent period in the US. Many people going to eat some fish, seafood, and blah, blah. So Q1 is always strong. Q4 is always a bit lower. Why? Because the people, they pay their taxes. There is a lot of local reasons for that, but their seasonality in Q4 is always a bit soft. And then starting again in Q1, and this is where I do expect to see some recovery happening.
So this the third quarter of this year is slightly abnormal, right? So actually, the fourth quarter, the loss will be higher than the third quarter, but this year it might not.
That's correct. That's correct. Why? Because I told you in Q3 we are penalized by the inflation. Okay, the price increase we don't have full effect in Q3. Okay, in Q4 we will benefit from the full effect of the pricing we did in August. And I told you very likely in November there will be another price increase also happening. Okay, so the food cost absorption will improve in Q4. And we do believe, I told you also that we have in Q3, we have some costs related to training. We have some costs related to restructuring. Okay, we do believe these costs will not happen again. Okay, keep in mind one thing, in our Q4 21 numbers, there were some subsidies coming from the US government. You remember we did communicate last year. You have the amount in mind? I don't have the amount in mind. If you get back to last year to Q4, it was $5 to $10 million for Red Lobster. 83 million in terms of bad for our share profit. Okay, that was in Q4 21. So Q4 21, the real performance, you have to start from the 147 and need to add back because we don't expect to benefit from this subsidy in Q4 22.
And about the accounting adjustment, do you think it will remain in next year?
Good question. Give me the interest rate, I will give you the answer. No, I think to make it very clear, if you read the documentation, yesterday the communication from the Fed, they are saying we are not done yet with the interest rate increase. We are not done yet. There will be some further interest rate increase in 23. Okay, this is the direction. Okay, I don't think it will be as big as it was in 22, very clearly, but this is the direction. Okay, Right now, we did not finalize our guidance. Our guidance, we will give it to you in our Q4. To be conservative right now, my personal feeling, I'm assuming no other income in 23. The same situation that in 22. We don't expect to have negative impact in 23. But if you look for the full year, there will be a zero coming in this line, other income. At this stage, it's not the official guidance for next year, it's just my personal feeling, just to be conservative. Just want you to take a step back this year without any interest coming from Red Lobster. We are very close to last year in terms of bottom line. Very close, okay? Meaning if at one stage we can start to recording again some accrued interest, our performance will improve. But I think you really have to focus on 22 performance. It's an excellent performance, even despite the preferred interest coming from Red Lobster. I think this is really the key message I want you to keep. Clear?
Yeah. Okay. About Red Lobster, do you think the raw material and labor factor, which one is more impact to the operation?
I think the labor, I think if, in Q2, especially the competition was very high. We told you we had to hire many people, and all the restaurants, they were hiring many people. And at that time, there were still some subsidies from the government, so there were many people who were not really incentivized to get that working. This is done. Now there is no more subsidy. So yeah, there was some inflation on the salary, and there will be some further inflation next year. The raw materials, it's a different story. Raw material, the shrimp price is kind of normal in the US, but we are using a lot of lobster. We are also using a lot of crab meat, okay? And these prices of these commodities are declining right now in Q3. Why are they declining? Last year, the prices of lobster and the crab meat went record high, and we have been benefiting from this, and this is why our frozen business in the US, we were holding a lot of inventories at that time. We have been benefiting from that. But it was so high that at the end of Q4, you had many restaurants, not Red Lobster, but many other restaurants taking out the crab meat, the lobster, or declining the orders, okay? So the demand collapsed, and then the prices are going down, okay? So this is good for us in our business, of course, depending on the level of inventories that you have. But right now, in terms of raw materials, shrimp under control, lobster and crab meat are declining, and declining very strongly. So this will help us to absorb the inflation coming from the utilities, coming from the labor, and all the other stuff. This is true for this seafood. Different story, we are also using some meat and some other raw materials at Red Lobster. Here we can see a bit of inflation.
I have a question about the average selling price for each, traditional product of Thai Union. When the inflation decline, when the raw material price decline, will the average selling price decline?
I think two topics, depending which category, you will have different answers. Okay, if I talk about the ambient, the ambient, which is a key one. In the OEM, in our OEM business, very clearly, as soon as the fish price will be declining or the total cost will be declining, we'll have to give it back to our consumers. Why? Because all the competition will do that. The question is how long, how quick do you need to give it back to the consumers? Very normal. We are used to do that. We are doing this since 40 years already. Different story in our branded business, okay? You know the branded business, and again, situation is very different from one country to another country. Sometimes they have some yearly contract, okay? Sometimes they have some quarterly contract. Sometimes they have some 6-month contract. So here the lead time can be longer, and sometimes we can benefit from this one. We have been penalized in our branded business in 22 because we are not able to react very quickly because of this longer contract. But on the flip side, when the cost will be going down, usually we are benefiting from this situation.
Thank you.
We have 1 more minute if there is one more question.
ค่ะก่อน
And before we end our session, if you have any other questions or you're under any other interest in ITC, we will have an ITC roadshow in Bangkok on the 16th of November at Pullman. And we will open for registration to attend that, and we'll provide details in the group chat so you can inform our IR team if you are interested in joining this.
Of course, there was no question on the valuation we do expect. I'm very surprised. Of course, we cannot communicate anything on this one, but as you know, this is very attractive business. Okay, so I really encourage you to go there. It's a very exciting business. We are very pleased to go to this project. Of course, it will be subject to the market condition. We told that from the beginning and also from the approval from the SCT. But this is a very exciting project for Thai Union. You know, the idea is really to unlock values for our shareholders.
Okay.
No more questions?
guess
Thanks a lot,
that's
everyone.
it. Thank you, everyone, for joining us today. I hope you would go back and write good things about us this time. And see you next quarter.
Thank you, everyone. Stay safe.
ขอบคุณค่ะ